All right, guys, welcome back for another video. In today's video, I just want to do a brief update on Bitcoin price action, specifically Bitcoin price action. You know, uh, and I do like to start from the high time frames and sort of work my way down. And really, not much has changed on the high time frames for basically the better part of half a year. You know, I know it feels, pretty. The emotions in the market are pretty extreme, but for all intents and purposes, Bitcoin has basically been hovering around 20,000 since the capitulation in June. So you had this run down to 17,000, then a rally back up to 24, 25, and then, of course, a sweep of the lows down here. But this low right here is where you really saw the capitulation come in, measured by realized losses. And that's why, while it's not exactly the floor in the market, you just aren't seeing the same, 50% sell-offs that, you typically, had seen in the past for the past year, even on like the most bearish news you've ever seen, right? Like people blowing up and everything going insolvent. Yeah, you see a little bit push down, but the 50% push downs, those are not happening basically because we've already got capitulation. So the capitulation came in here and you see realized losses hitting extremes. So anyway, we've just kind of been oscillating around this level for a while. And, we can go down to the weekly chart. Again, I do want to reference the fact that this is, around the previous all-time high right here. And that's very significant. I mean, it's easy to understate this point, but it just sometimes I think it's lost on people that that price has been around this area for so long. So you know, a lot of people up in this phase of the market, they would have told you that if price came down and retested this level right here, that would have been a great buy. And actually, it was a great buy initially on this capitulation leg down. You can see that price rallied off this level right here. Now, of course, it swiped it again, but you had a tradable level right there. But even when price got there for the first time, a lot of people who said it was a great idea to buy it while price was up here, they didn't want to buy it. Of course, price rallied off there. But now we spent so much time at this level that, you know, people have kind of forgotten the significance of the level. So I think that's another component of capitulation, right? Where here, you had the capitulation come in June right here. And that's where you saw the realized losses come in and hit historic extremes. So realized losses came in and hit the highest level ever recorded in Bitcoin's history. And that's one way to measure capitulation. But psychologically, there's also the component of time to capitulation. So, you know, some of the people who didn't immediately capitulate here, price just grinds them down, right? Over a period of half a year, roughly. Um, but we're still at that level, right? And the realized losses are continuing to pour in. And if you notice, the RSI peaked during that capitulation that we're talking about right here. So if we just look at that in isolation, you can see how, you know, it dipped a little bit below it, but really there's your capitulation in the market. And yeah, you got capitulation runs lower, running liquidity below here, but then you get the bullish divergence coming up on the RSI. And the RSI actually confirmed this drive of bullish divergence from here to here, closing above the previous high right here. So we mark that off right there, kind of drill down into this level. We'll pull everything else off the chart for now, but just want to mark this off. Pull this off too. Again, this is significant. I've mentioned this, at length before, but this is the first weekly divergence that's ever been confirmed in Bitcoin's history ever, right? So again, we're at historical extremes, right? We've never tested a previous all-time high before in Bitcoin's history. When we did test the previous all-time high, in this candle right here, there was greater capitulation or realized losses than ever before in the market. And then we did one run below these lows, and then we confirmed RSI divergence on the weekly for the first time ever in Bitcoin's history. So there's a lot of first time ever happening in Bitcoin. At the same time that market psychology is extremely, poised in one direction. And that doesn't necessarily tell you that the bottom is in, but it should make you comfortable. You should be comfortable feeling like, everybody else thinks your trade is a terrible trade idea. Um, I know it's not like a normal way to think for people, especially right off the bat, because, we're human beings. We want people to approve of our ideas. And sometimes we rely on social signaling to tell us that, if our idea is valid, and we look to other people to say, yeah, I think that's a good idea. But in the market, it's just not like that, right? Like, again, it's not saying that there's a bottom in the market, but the point is you should be comfortable, feeling like everybody in the whole world thinks your trade idea is a bad idea, right? Especially when the market's at extremes. Um, and I think this type of what's going on in the market right now, is really at extremes. And it's important to keep in mind, like, how you feel at this moment, what's going on, journal your reactions to different events, what other people are saying right now, because there will be a point in the market where people are saying, the exact opposite, right? Where price is going parabolic. And in those moments, it'll help to revisit some of the things that were occurring here, because it's a similar dynamic, but just flipped on the other side. So anyway, we confirmed our first weekly divergence here. I marked off that prior high. It was the close above this high right here that is significant. So I want to drill down on that and go on the daily chart. Again, there's the weekly high right there. You can see as this daily close. Well, let's see what was the exact weekly close. So we got November. So it was actually the weekly actually closed on the 4th. So you got your break above that weekly high right here that confirmed it. If you're, a you don't trade closures. Some people just simply would look at trading above the prior weekly high as confirmation. Well, for people who are waiting for closure, you actually got the weekly close right here on December 4th. So I'm going to mark that off. And this is really when, again, the historic stuff starts happening in the market. So anyway, we get the close above right here, and Bitcoin comes down and retests. We can actually go down to the 4-hour chart and drill down even further. So you can see price, runs above the weekly high, comes back immediately, tests down, runs up, tests down, tests again off this level, right? Twice. And then closes the week right here, closes the week above this high right here. And then you get naturally you get your confirmation, and it's not lift off right away. You get the market kind of gyrating around, searching for liquidity. So I really want to talk about that. I'm going to anchor the left side of my chart to this area right here, because I really want to focus this break above the prior weekly high, considering what the RSI was doing, is really a change in behavior. And I do think, you're seeing a change of behavior on price. Again, so I would look at this as the current price swing we're looking at right now. I can pull this off the chart right here. And just keep in mind, this is the prior weekly high from early December that was the change in behavior when it closed above. And so when we look at this, a lot of times you'll get a swing, and the swing will kind of come back down into, kind of this price pause shelf area. This is the weekly 21 exponential moving average. A lot of times, not the weekly 21, the 4-hour 21 moving average. A lot of times that'll come in at the same area. So you can kind of see this, price is wedging into it's forming a little bit of a wedge right here. Again, I don't trade wedges, but this is just to illustrate the point. And then you see, that breaks to the upside, runs liquidity above this area right here, running stop loss orders. Now, what is significant, I think, is the fact whenever you see, hold on, let's see if we can. Anytime you see liquidity ran like this, and then price comes down and slams back into the consolidation, that's generally, going to be an indication that this was an apex formation. And generally, if I saw this type of thing, I would look for price to move lower. Not necessarily a full retracement, but to start looking for liquidity lower to the downside. So, we actually did see that. Let's see if this closed. Let's see what this low is. This low is 17,175 on Bitfinex. Oh, sorry, 16,703 on Bitfinex. And this is 16,701. So, didn't quite run the lows, but basically you get a test of these lows down here. Price runs up back above that prior weekly high. And now it's running back up for here. So, this could be an area where, similar to what we saw here, where you had the wedge forming, you could see a similar type of pattern forming here. If that were to happen, you would see something a little bit like this. And again, this is just for illustration purposes, but you could see of course it could break anyway, but if you do see a break above these highs and a close above on a 4 hour, I think that's sort of when we're off to the races, so to speak. If you see, again, the similar way we kind of drilled into this price swing on the daily, we can drill into this price swing right here on a 15-minute chart. So again, we'll just pull everything off the chart and then go down to a 15-minute. So here you've got another classic formation, kind of similar to what we saw before, right? You see a throw above here to grab liquidity and then a throw back down. That's generally a sign that price is going to run for liquidity to the downside. But I just want to run through this just to illustrate the basic price concepts right here. Price runs up, runs liquidity above here, throws down, test up, rejection. This is kind of where you would expect price to kind of fill out the rest of this retracement right here, test back into a level like this. Remember, these areas of impulsive price movement they really represent like gaps in liquidity, and you can get a quick test down into the area prior to the inefficiency created right here. And generally, if you were trading that, I would be looking at this swing. You could put a 618 Fibonacci. It's lining up in the same area. This kind of rounds out basically the way I look at swing retracements. So again, you got the run up above here, slam down. Then I would be looking for price to retrace to the lower side of the swing, swing premium. And that, if you were to, the way you kind of look at swing premium is you could mark off like I have the 618 retracement, but you could mark off the 0.5 retracement. And this is the midpoint between this low right here and this high up here. And anything below the midpoint basically represents premium within the context of that particular swing. Anyway, now see, we have this swing and we can zoom out on the 4 hour and put it within the context of the larger swing. So remember, it's the same concepts we're looking at here, right? So here you have the throw over here. We're on the 15-minute. You got the same throw over here. Throw over, run down for liquidity. Throw over, probably come down, look for liquidity and premium. And the same concept applies here, right? Where if you have a violation of this stop right here, a lot of times price will come down, maybe just, briefly run the stops below there. It doesn't mean price will collapse, but if this low gets broken right here, then this 15-minute swing is kind of invalidated on that level. And a lot of times you'll see price come down, run just below that level, and then rally up, right? And then rally into something of a bearish retracement. But I think, if this swing were to break, then that's kind of an indication that, yeah, it could retrace up, but ultimately the market is in a state of delivery where it's looking for liquidity to the downside. So in that scenario, you could get a run. You could, if I saw that, right, I would draw a 618 retracement. Again, we're getting way ahead of ourselves, but say price had a stop run down here, I would look for a retrace up there, and then probably for another run of liquidity down here. And again, this is something that is totally, even though we've confirmed weekly divergence, uh, this is totally something that is possible, right? I mean, the market generally does kind of wash out over leveraged players at the lows, prior to making its ultimate run up. But I just, with what we're seeing on the RSI and in capitulation, I just don't see this part of the market as like the floor is about to drop out. Again, kind of revisiting that same idea, we had the capitulation basically, this final leg down from 50K down to 17K. And that wasn't really on the back of any major news. I mean, of course, you had interest rate rises, but a lot of the most bearish things that have happened in the market basically have all occurred, after the capitulation, right? So you've got the component of an influx of, well, first of all, a very rapid price decline. Um, this is, you're talking over 50% price decline in a period of several weeks. I think that's actually a record for Bitcoin. But you get that rapid decline, and then you get kind of grinding around this level on the back of extremely bearish news, right? And then you get the final leg down on the FTX collapse right there. So, you know, but what's important to keep in mind here is that even on the back of all of that, all of those bearish things happening, price really isn't that much further below the capitulation, right? It's again, it's not saying that the market couldn't go lower, but I just don't see from a risk reward perspective uh, looking for downside, right? Because I think the real risk, if you are looking to, if you are opening short positions down here, I do believe that's a real risk. Because price could run very dramatically, right? And it's exactly in these points in the market where people forget how radically Bitcoin can rally when it does rally, right? I mean, we all know that. We, if someone asked us about it, we could tell them, yeah, that's characteristic of Bitcoin. But it's exactly these phases in the market where people, kind of forget about that and sort of behave in a way where they, you know, at least on a subconscious level, are acting like, that can't happen, right? And the whole point of this video is kind of to illustrate the idea that, well, this is actually the phase in the market where, something like that actually could happen, because you have a lot of people, you know, um, well, opening short positions, and a lot of the longs are already washed out, and you're getting in a supply situation where, basically a lot of people are holding Bitcoin in cold storage. There's only a finite and limited supply, you know. Again, people kind of lose sight of how dramatic a short squeeze can be in Bitcoin, but of course we all remember those. But it is a scenario where things can get very dramatic to the point where, price could rise 50%, 100% very quickly. And, if there's not enough supply to collateralize all those short positions, then, it just adds fuel to the fire. Um, Again, not a prediction that will happen, but got to go level by level. But it is something to consider if you are opening short positions and you are putting on risk. Just to be careful, just to manage your risk, have quickly identified levels that are close to price. Not, not you don't want to find yourself in a scenario where you're doubling down on a losing position as there's a supply shock underway. Anyway, I hope you guys like this video. If you haven't already, please make sure to subscribe, and I'll catch you guys in